Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, October the 6th. And we've got a selection which is rather difficult even by the standards of this very volatile part of the market. Starting with Mosman Oil and Gas, where there's been the breakdown below the August 17.5 pence neckline support. Ideally, there would not have been that breakdown. We would have progressed back towards the upside towards the end of September and the beginning of this month. But we've had a support test back at former May resistance, which is around the 15.5 pence level. And it looks as though this could be the floor of a rising trend channel from April, which will then see the shares stage something of a rebound. If you're cautious of the stock, maybe you'd wait for an end of day close back above the 10-day moving average, currently at 18.5 pence. But this rebound off a RSI support line to start October does look quite encouraging. The initial target obviously would then be 25 pence plus, which is August, September resistance. There have been fun and games as well as far as the bulls are concerned at Oilex. A rather sharper pullback from the July peak at 12 pence that many would have expected, but at least we have seen a rebound or a bear trap rebound from just below the 200-day moving average at 5.93 pence, and that's a decent end-of-day close stop loss for those looking for a new leg to the upside. Initial target, obviously, the 50-day moving average at 8.6 pence, which is also mid-September resistance, and after that, on a 1 to 2 month time frame, you'd be looking for progress back to retest the best levels of the year seen in July. Finishing off with a situation which is still causing traders plenty of anguish, let's say. That's coming in the form of Quindell, where we called the rebound here from the September low, 136 pence, bear trap low a few days ago. There's been decent progress here, but the problem is that, as you can see from the recent past, at least post July, shares have tended to rally towards the 50-day moving average and then fade after that. The 50-day line is currently running at £1.72, and really one would like to see an end-of-day close back above that before getting sort of fully bullish on this situation. In fact, maybe even a weekly close would be better in terms of making sure that those who still doubt the bull argument would have that much more confidence. In terms of those who are already long the shares, an end of day close back below the 20-day moving average at £1.60 would be the stop loss, especially as that's also the broken April resistance line, and this bullish wedge formation that we have was broken with the break of that level. In terms of the upside, as a best case scenario, a retest of the August resistance towards £2.20 would be the target if we can get sustained price action, and only if we can get sustained price action back above the 50-day line. That's it from me. More updates at spreadbetmagazine.com.